Hi, folks. This is the daily scan for Monday, September the 8th. And let's take a look at what the market's doing today. As always, I am not a financial advisor, so this is for educational purposes only. Things look pretty bullish today. We'll take a look. Hope everyone had a nice weekend. Let's take a look at the S&P first, see what's happening. It's 11:18 a.m. on the East Coast right now. So you can see starting slightly moving higher, a little bit of a gap up this morning. Money flow looks pretty good. Technology, all the aggressive financials is down, but the rest of the aggressive sectors look pretty good. Discretionary, communication services, industrial starting to head higher. So aggressives look pretty good. Defensives, healthcare is down, staples down. All the defensives are down. So the rotation is into aggressive areas again. So that's very bullish for the market. Of course, we have the CPI inflation report this week. I'll show you that in a minute. This is growth versus value. These are the rotation charts. Growth versus value, clearly higher. Discretionary versus staples is up. Technology, semiconductors, internet. So again, all of the aggressive areas are very bullish. That's positive for the market. The Russell 2000 started off actually pretty negative, pretty weak in the morning, but it's starting to come back now. So as you can see down here, growth versus value, large cap, mid cap, and small cap, they're all heading higher. Pull back slightly, but it's encouraging to see that it bounced right here off the 50 and started to head higher, because I was a little concerned the way it looked this morning. The S&P looked much stronger than the Russell did, but right now it looks like it's coming back, so that's good. And the NASDAQ 100, of course, same thing, gap up. It's hanging in there right at the pivot point. So the first pivot point, second pivot point's up here. So it's hanging right at the first pivot point. So we'll have to see if it's going to stay there. Up volume versus minus down volume is starting to head higher. That was down low when we opened this morning. And you can see advancers and minus decliners was down as well. So this was weak too. Even with the gap up, this was pretty weak this morning, but starting to recover now. So we'll see what happens into the close. Now, we'll take a look over here at the CPI and see if we get a sense for what might happen. So CPI is based on what's called the base effect, which is a 12-month window, a rolling average window. And as one is added to the front end, like we will get this week, then this one here drops off of the back end. And if a large one drops off like here, it will be very constructive to CPI. In other words, CPI or inflation will look like it's coming down when one of these big ones drop off. When a small one drops off like here, and this one here was actually negative, and that's why I put this in here. CPI could go up here, which it absolutely did go up 2 months ago. You can see last month the forecast was 2.8 and it came in at 2.7. This month the forecast is at 2.9, and I think it might duplicate last month. It might come in a little bit lower than forecast. However, take a look at the long-term trend of CPI. So it came in at 2.7, which is right on the trend line. You can see we've hit this multiple times, going all the way back. This goes back probably 2 years now. So CPI has been steadily coming down, even though it's a little bit choppy, but in general, it's been coming down. So if we get anything higher than 2.7, if we get 2.8 or 2.9 for sure, that's going to put this above the trend line, and that will break the trend line. That implies that inflation may be heading back up again. We'll see how the market reacts to it. At the 2.9 is the forecast number. It might actually be positive if it comes in at 2.8. We shall see. And then, of course, this whole moving window will move 1 month to the right. And then you can see that the ones that start to drop off are getting bigger and bigger each month. So inflation is going to start to look like it's dropping until we get here. We've got another negative one right there. So this is all the way through to the end of the year. This is in the fourth quarter when these are going to start to drop off. So that's going to be very constructive to the end of the year. So keep that in mind. One thing also I added to the homepage, and this is open for anybody, even without a subscription. I have the secular bull markets down here, so you can see when a secular bull is about to end. Secular bulls typically last 18 to 20 years, and bears, secular bears, last about 12 years. So you can see this is where officially we started this current secular bull. You could mark it from 2009, but this is the point where it broke above the previous highs. So we've got till 2029 to 2033, somewhere in that neighborhood. But to know whether we are ending the secular bull, just keep an eye on this chart. When it goes down below these lines down here for the momentum, and below zero here for the MACD, and below the 200-week moving average, then the secular bull has ended. Now, what I added was just to get it, I was wondering how many years have been lower. How many years over a 45-year period have actually ended lower? And what you'll see over 45 years is, and these are the secular bull and bear markets, 45 years, we got 1, 2, 3, 4, 5, 6, 7, 8, 9. Only 9 years out of 45 have ended lower. So this shows you, actually, I think it's 10. I think I missed this one. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yeah. 10 of them. I missed 1994 right here. 10 out of 45 have been lower at the end of the year. This shows you how bullish the market typically is. It's very difficult to short the market unless we're in a secular bear market. And then we get a long extended downtrends when that happens. But in a secular bull, the downtrends do not last long. The longest one was right here in 2022. Even COVID did not last very long. So we're right up here, and we're right near the top right now. Back to the home page, you can see the current bull market right here. We're sitting right at the top of these trend lines. In fact, we're actually a little above the trend lines right now. So it's due for a break, certainly, but there's still, it can come down quite a bit and still be in this bull market. So keep that in mind. All right, let's take a look next at the dashboard, see what the dashboard's telling us. Anything? Look at equities. Equities, Dow slightly up, S&P is up, NASDAQ 100 is up, VIX is down. Once again, well below 17. So again, very complacent, very bullish. The 10-year is down. The 20-year is up. The 20-year actually is doing really well, starting to move much higher. Commodities, gold is up, silver is up, oil is up. So all the commodities are starting to climb. Gasoline is down. Crypto, Bitcoin is up today, 112,000. Ethereum is up as well. They are pretty much neck and neck right now. So they look pretty good. And the sector summary, technology, discretionary, industrial, services, these are all aggressive sectors. They are leading the market today. Not much breadth, though. Everything is pretty neutral. It's almost equal for advancers versus decliners. So yes, the aggressive sectors are leading, but it's pretty weak leading. At the bottom, we have all of the defensive sectors: real estate, utility, staples, and healthcare. This is exactly what you want to see in a bullish market. So the market looks pretty bullish right now. Synopsys reports on the 9th, which is interesting because it actually made some of my scans. So that one was looking interesting earlier today. So that report, they report tomorrow after the close. Costco also reports on the 25th this month. So keep an eye on that one. And the industry groups, discretionary technology, financials, one defensive, staples, is in there, but everything else is all aggressive sectors, looking pretty good. And the top 10 list, Planet Labs, I don't know if they reported today, but they are zooming higher. EchoStar also continuing to go higher. Robinhood starting to make a comeback now. Looks like it's getting ready to break out. Astera Labs, which has been really in the top 10 for quite a while. It's really making a huge move higher today. AppLovin, another one that has always been in the top 10. Again, gapping up, making a nice move higher. Let's see what's in the bottom. Sunrun pulling back. What else? Nothing else here that I recognize. Celsius, oh, Celsius is really dropping quite a bit. And Solar Edge, which had been moving up lately, but it's starting to roll over now as well. And AST Space Mobile, this one was in the top 10 last 2 months ago, but now it's just been generally trending lower. All right, so that's what that looks like. Let's look at the market. Go up here to charts and tools, look at the market carpets first. And this is just for today. So you can see NVIDIA looks nice. Microsoft moving up. Got some reds here. Amazon moving up. So most of the Magnificent Seven are pretty much green, other than Apple. Most of them are green. Tesla is down a little bit as well. As far as groups, we've got Staples over here. Walmart is leading Staples. Everything else looks pretty red. Utilities looks pretty red. And healthcare right here. Eli Lilly heading down. So Palantir over here on the top movers today. Oracle is moving up. Broadcom, Palantir up 3%. So here's some Synopsys reports tomorrow, up 2.5%. So that's pretty interesting. A lot of the large cap names are starting to move again. So that's hopefully will support the market and keep it moving higher. Let's take a look at the relative rotation. And for this one, let's see, what do I want to do today? Let's do the daily chart. We're comparing it to the S&P. And let's do a 3-month. And let's look at growth versus value. I think I did that last week. So let's look at a different one. Let's look at bond maturities. See what we have here. So TLT is over here. It's improving. It was way over on the left-hand side. So left-hand side is basically the relative strength. And that's the x-axis. The y-axis over here is momentum. So it has lots of momentum, but not much relative strength. But it's improving. So it's moving higher. And then if we go down here, we can actually look at each of these. So 7 to 10-year Treasury bonds is the one that's moving the best, moving the highest. 3 to 7 is moving down. 1 to 3 T-bills is moving into lagging as well. The 1 to 3 bonds are lagging. And then TLT and TLH is the 10 to 20-year medium term. That both of those are starting to move higher. So looks like the rotation now is into the long end of the bond market. Okay, so finally, let's take a look at some of the scams. So we've got over here. So this is, I've got one teed up. This is all stocks that have weekly options. And these are ones that are just getting over their 21-day EMA. So we've got, let me run this again just in case anything new came in here. So Adobe starting to move up. You see it over here on the left, just above the 21. This one here, all of these will be right in the center of the Keltners because the 21 is the center. But watch down here to see if they have a squeeze. That's the key. So eBay, positive. That one's looking good. DoorDash has a shooting star. So tried to make a run this morning. Now pulling back. GitLab is pretty choppy. Robinhood had been down for nice pullback right here, right to the 50, and now it's really accelerating higher. So this is a good entry point probably for Robinhood, especially if it breaks out above this 115 level. Software looks like it's doing pretty well. Marriott, Monster Beverage, sorry. Oracle, mentioned that before. Here's Synopsys. Oracle actually looks pretty good, and now it's above its 21 and it's 50. So Oracle looks like it's starting to come back, and looks like they have earnings tomorrow as well after the close. So Oracle and Synopsys both have earnings tomorrow after the close. Synopsys, I think, looks a little bit better. Nice organized downtrend pullback right to the 21 and now starting to move higher again. So if you want to take a chance before earnings, this looks pretty constructive. or you could wait till after earnings. Likely, if they have good earnings, it'll likely gap higher. Uber is on the list, starting to make a comeback as well. It has a nice hammer from last week. Industrials moving higher. And Zscaler actually looks really interesting, I think. It pulled back all the way back here. It had earnings last week and now trying to make a run higher. Just today is above the 21. It is in a squeeze right now. So you see over here, this 1, 2, 3, 4, 5, 6, 7, 8-day squeeze. And the momentum bars are moving higher, about to cross over zero. So this one, I think, is the most interesting looking one of all these charts today. We'll see how Zscaler does, but it's in a squeeze and looks like it might be getting ready to take off. All right, finally, the last thing is short squeeze. I don't have any new ones today. So I'll take a look at the one that came in last week on Friday, and that was TNGX. So this was a short squeeze on Friday. You can see the volume down here. So that's what makes it. That's what allows it to make the list, is the volume. It did pull back into a shooting star, but it's trying to still make a comeback, and it really needs to get above the, make this blue, it needs to get above this level right there. So right in that area right there, if it breaks out of that area, then, and it's interesting that there are so many shorts on this particular one. So that looks like it's at 738, 740. If it breaks above 750, this one here on Friday, the high was 740, and the high on this one was 742. So if it were to break up above 740, then all the shorts will then start to cover. And just out of curiosity, I want to see how much of a short squeeze this might be. Give this as a edit, and that was TNGX, 20%. So it's on the lower end of the group. You have to have at least 20% in order to make the list. So it's just barely above 20%, but 20% of its float is short. So that qualifies it as a short squeeze. So, and it also is in a long, I wonder if there's, you know what, I'm going to go back over here and I'm going to look at that one here, TNGX. I suspect it's in a really long squeeze, because whenever you see something going sideways like that, most likely that's a squeeze. So this is in a really long squeeze right now. Momentum has been coming down, but starting to turn up. The green ADX is above the red, but not above 25 yet. So it's just really getting started. This volume right here may be implying something. So if it does break out above 750 for sure, then all those shorts are going to start to cover. It's also in a squeeze. The squeeze is going to fire. So keep an eye on this one. This one could end up being a pretty good short squeeze. All right, no new ones for today, at least not yet. Sometimes they come in right at the end of the day. All right, that's it for now. Thanks for watching. Please like and subscribe, and let me know if you have any questions or anything you would like for me to look at. Thanks for watching. Take care.